As a banker, you have had the opportunity to observe best practices implemented by our local business community. If you had one best practice to share, what would it be?
I can't do it in one, but I'll keep it short, I promise. I would have to say there are two things I'll mention. Is one, as success comes, don't spend the money the minute you make it. Be frugal on the business and personal side. You have to maintain liquidity. The business owner must understand leverage and the impact that leverage is going to have on your financials, your balance sheet, your income statements, cash flows, and always keep those statements in as clean and as tight as you possibly can. One of the things that I see that business owners do not do enough of is analyzing the impacts of potential economic or cyclical downturns. Or what about growth? I mean, we're all out there to grow our businesses, right? But consistently, I'll get a request. I need $150,000 for a line of credit. I want to do this and that, and say, well, what is that growth going to look like? What impact is that going to have on your financials? And it hasn't been done. And growth is something that requires quite a bit of leverage. Think about it in this manner. If you are growing and you acquire a bunch of equipment and you are borrowing that on a 5-year term from the bank, and your payment's $2,500 a month, and all of a sudden your sales decrease for whatever reason, you still have to pay that $2,500 and your employees and everything. And so really think about that. And that's kind of some quantitative issues. And just one qualitative issue I'll mention is, I often see business owners just so close to their business, and that's a good thing. But sometimes it impacts them negatively in that they can't accurately gauge the risks and consequences of their actions. And I would just say listen to the advice of your financial consultants, your bankers, your confidant, whomever it may be. You may not agree with us always. Go out and get a second opinion. If you hear it twice, you probably want to sit back and really think about what's being said. I will say that somewhere along the way, the successful business owners, the good business owners, have abandoned their heart for somebody else's brain at some point. So just kind of keep those facts in mind.
It's always tough going second. Well, I could make it very short and sweet. I think that one thing that I would like to leave everyone with is bigger is not always better. It's, there are always going to be opportunities to hit the so-called home run, but if in doing so there's a cost that requires more employees, the list goes on at what it takes if you're going to try to climb that mountain. But on the other side, it also increases your risk if that doesn't pan out, and say you lose that main client. In tough times like this, I think that small businesses need to be very in tune with their company, and that means the inventory controls, their receivables. Nobody likes to call people and ask for money, but if you don't do it, somebody else is, and that's critical. Staying on top of that, not letting people stretch you out and be the bank. Making staff reductions. Nobody likes to do that, but when you're in survival mode, you do what you have to do. And as Americans and entrepreneurs, we're going to survive this and we'll get through it. It's been a very tough time for everyone concerned. We're not sitting up on our pedestal looking down, shaking our finger. We're in here with you. We like to form relationships with our clients, and so this is tough to watch some of the struggles out there. But like Mark had mentioned, utilize other people, get some other opinions. You probably are not going to like what you hear from your bankers right now, but it can give you some other things to think about. And you know, if that means meeting with them on a quarterly basis, you know, and going over numbers, how can I make it any better? You might get something out of that.